Hey everyone, happy Friday. This is Jason Jacoby with your closing bell. Hope you all had a wonderful week. I know it was a rough week in the markets. Dow, NASDAQ, and S&P 500 all down over 4% for the week, all down over 3% for the day, actually, because of our first major topic that we'll get into. So Fed Chair Jerome Powell said that the Fed is planning on increasing rates by approximately 75 basis points, could be 50 basis points, but more likely will be the 75 basis point, which is 0.75% of 1%. That is going to be the rate hike more than likely, just because of how inflation is right now in the current environment. It's still extremely high. It is starting to come down, which is a good sign, which gives me hope for positivity and that we could get things back under control. Because right now I'm feeling it in my pocket. I know all of you are feeling it in your pocket. Thus why I think we're in a recession, honestly. The consumer is still spending. I think that's just COVID hangover per se, meaning that people just were, cooped up or, businesses were shut down for so long that, people want to be out and they're really enjoying spending time with friends, families, visiting their old local haunts and restaurants and stores that they missed out on for so long. Plus, it's also summer, so inflation always kind of spikes in the summer because people are out traveling, spending, buying gas, going all over the world. The world's reopened, so it's a combination of all those things, I think, and more. But we got to get inflation under control, which again we've been harping on for so long. I sound like a broken recorder. I'm sorry, but that is what the Fed is trying to do. They are trying to get inflation under control by increasing rates aggressively. It's what we call a hawkish tone. With that being said, the market overall, we've rallied 50% off of the lows from June 16th. Do I think we're going to get back down to the June 16th lows? It's possible. It's possible what we call what's a retest of the lows. But are we going to set new lows? Possibly and probably not. If you look at history, we have never in our history of the markets recovered 50% off of our lows to go down again and reach new lows. So that is a cause for optimism, in my opinion. So we could retest those lows. But again, I think we've seen the worst of the movement. We could continue to see some downward pressure and some downward movement to retest those lows. But again, there's going to be volatility here for the meantime. I think the market's already priced in the recession that we've been talking about. You look at the stock market, it's called a leading economic indicator. So it looks in advance, about 8 or 9 months in advance, to see what's going on and what the prospects are going to be at that time. So we've already priced in that recession. And stocks usually technically bottom out, I think about 6 months or so prior to recession. But anyways, being said, please, don't get emotional about the markets. It's going to be okay. Again, we've already rallied 50% off the lows. Yes, it's been a bad week. This is actually the worst day in over 3 months for the markets. But again, we're going to have those. We're going to have these growing pains. We're going to have this reset that the economy needs, right? Because again, we had the best economy the world's ever seen prior to COVID. COVID shut the world down. We reopened and, had a little bit of a bull market again there for a couple of years. And then as of January 5th of this year, after the highs, all-time highs, it's been the worst start to a year in over 5 decades for the major indexes. And for the tech index, NASDAQ, worst start to the year ever. And accompany that with the double whammy, I like to call it, which is the worst start to the bond market, or worst start to the year for a bond market since the 1800s, which tells you something. So double negatives there, which hopefully equals a positive in the long term. Recession resets our economy. Again, companies are already laying off workers, which is highly unfortunate, trimming the fat because they know they're going to have lower corporate earnings moving forward. So something to watch. And then in other news this week, President Biden came out and is doing student loan forgiveness up to $10,000 for single taxpayers, up to $125,000 in earned income per year, and $250,000 for married filing jointly couples. And then you get another extra $10,000, so $20,000 if you had the federal Pell Grants. So something to look out for, how that's going to impact the economy. We'll dive into that a little bit later, maybe in the next foyer brief, once we can run some numbers. But again, that's the big news for the week. If you have any questions, comment below. Subscribe to our YouTube channel. We do these every Friday. and put out some other awesome content as well. But let us know what you want to hear about, what you want to talk about. But for this week's Closing Bell, I'm Jason Jacoby. Have a good one.